Okay, good afternoon. Um, we just realized that our panel was competing with the female founder event, and I can see the room is about half as full as it was for the panel before this. Turns out we've lost one of our panelists. I think she went to that event instead of coming here. So, but if she does show up, we'll have her join us. Let me start by maybe asking my panelists to give a couple of minutes, a couple of seconds, whatever introduction you'd like to give the group and why you're here and and then let's start getting into it.
Sure. After you, Joe.
I'm Joe Landy, co-CEO of Warburg Pincus. Panel's entitled the Future of Venture Capital. So we actually practice venture capital as well as the other sort of asset classes of growth to full-scale, mature stage investing. So we have a lot of opportunity to think about the different classes of investing. We're global. We invest all around the world. We're managing some $45 billion of assets, and we invest across the spectrum from everything from healthcare to technology to energy and financial services.
Quite a venture capital fund. Nick?
Yeah. Hi, Nick Rizal Kamil. I'm with Khazanah Nasional Berhad, which is the sovereign wealth fund for Malaysia. I'm currently heading the private markets practice for North America and EMEA. Khazanah is a sovereign wealth fund for Malaysia. We're also invested in several sectors across the various asset classes. The exposure currently today is probably about 60-65% still in Malaysia, and the remaining being on a see-through basis in ASEAN and also globally. For developed markets, I'm actually in charge of also Europe, and also our practice in Turkey and Middle East and North Africa.
It's a small area of the world.
Yeah, just a little bit.
Yeah. And in full disclosure, Nick is one of my investors, and so
yes, so we're
good friends. So I promised him I'm going to only ask him the tough questions.
Yeah, as he always does. Yes.
All right. So my name is Sumant. I'm a partner in March Capital. We have a LA-based fund, which is about $650 million, but we're about 5 years old. So I have a slightly different perspective, and given we have a very light panel, I may have not just the questions, but some opinions as well. But let's start with you, Joe. What do you think is the most exciting part of this business today? What do you find the most interesting? What is it that makes this business worth spending time on?
Well, it depends whether you're you're investing capital or actually receiving capital. As an investor, what I find to be most interesting is always figuring out what the next new thing, is. Where around the world one can actually generate the kinds of returns that our investors have come to expect. So, above market private equity returns, which has become more challenging, frankly, over the last, since the financial crisis, I'd say. It's become considerably more challenging. But actually trying to figure that out.
Is there a certain geography that you're more excited about? Is it a certain type of business, stage of business? Is it agnostic? Is it, so what's if you had to slice and dice what's going on right now in your portfolio, in your interest, where is it the most exciting?
The way that Warburg Pincus, which is a little bit of a different model from the traditional Silicon Valley venture model, but the way that we evolved, we started with that model at one point. And we have grown it to become full-scale investors. And what we try to do is actually look out where the best geographies are to be investing, where the best technologies are to be investing in, with the best management teams to back in terms of building out their business plans. And we're doing all of that on a relative basis. So everything goes into one fund. Each of our funds has approximately 80 businesses, which is actually an interesting filter when one tries to actually assemble a diversified portfolio for our investors. So when we look at what's been more exciting over the last handful of years, our technology clearly has been exciting. And I don't think I'm going to surprise anyone with sort of our SaaS-based software models and the success we've had in a number of businesses there. Cybersecurity, we probably have more cybersecurity investments than any other venture/private equity firm in the world. Those have been very interesting. Genomics, I find to be very interesting. And in terms of geographies, half of what we do almost is in Asia these days. A lot in India, a lot in China that we find very interesting.
And again, in disclosure, we have a joint investment in India. We have one here as well, and so we know the firm well. I'd like to welcome our missing panelists. Maybe get a
Yes, I
couple
was
of...
in the opposite end of the property and then getting mic'd up, so I got to hear everything you were talking about,
Yes.
which is awesome.
So maybe introduce yourself to the...
Kate Mitchell, Scale Venture Partners. We're enterprise software focused. A number of portfolio companies are here. Lever, namely, we've been in companies like DocuSign and Box and HubSpot and a few others like that. Co-founded the firm 20 years ago, and a compliment. We've done some great deals with Warburg over time. We are earlier stage investors. You know, Series A, our focus is scaling, so we take them from their first dollars of revenue to do something repeatable and profitable. Design metrics around it. We have metrics available for people to use for their portfolios or as CEOs yourself at Scale Studio on our site. And I've been chairman of the NVCA, and so done a lot of work across the U.S. and internationally on terms of
Very well known.
venture.
Yes.
Yeah. So my apologies.
Well, thanks for joining us. Nick, let's come back to you. As a sovereign wealth fund, which, you know, you inherited a bunch of old world assets.
Yeah.
What do you think of venture capital, and where does that fit into this ecosystem or your ecosystem of what you're trying to build at Khazanah?
Yeah, so venture capital definitely constitute an important piece of what Khazanah is trying to achieve going forward. As you rightly mentioned, Khazanah, when we started off about 25 years ago, is from inheriting the old economy type of companies and assets, which continue to be very important for Malaysia's own development. So you're talking about the National Telecommunications Company that provides fixed and broadband services. You've got the National Utility Company. As you know, we own 100% of Malaysian Airlines as well.
I was going to mention that.
So
Wonderful asset.
Yeah, so how we're sort of like looking at Khazanah portfolio now is we're essentially splitting the portfolio into two big funds. If you think about it, 30% of the portfolio is what we call the strategic fund, where it houses the kind of assets and companies that still which we see as very important for the whole scheme of things for Malaysia's own development. But the 70%, and of which I belong to that 70%, is what we term as the commercial fund. And here we are actually looking and organizing ourselves by asset classes. So it includes public equities, also private equity, which I'm sort of like heading for North America and EMEA. And we see that within those asset class that we need to be invested in different stages or different sort of like life cycles. There'll be certain areas or stages type of investment where Khazanah has built up experience and expertise over time. And you would expect that would be your typically later stage PE type of investments.
More direct investments.
Yeah, more direct investments. But something in VC is something which we've never had the experience previously. Now, via, for example, investing in March and building up the relationships, we hope to build sort of like deep relationship with a few partners that will then help us along the journey.
And you're not alone, but I do think one critical thing about Khazanah for people to understand is that their chairman is 92 years old.
93.
93.
Yeah.
Wow.
And he shows no signs of slowing down at all. In fact,
Not at all.
he's the new prime minister, or rather the old new prime minister of Malaysia. And if you try and explain to him technology, how does that go? What's that conversation like?
Well, it's good that you mentioned he's actually quite savvy with regards to technology. If you think about, he was Malaysia's fourth prime minister, I believe from 1981, where he ruled for about 22 years. And
he founded Khazanah.
He founded Khazanah, and he was also the, if you like, the architect in terms of telco consolidation, liberalizing quite a few economy, sort of like industries and stuff like that. So he's actually quite at the forefront. Notwithstanding that he is 93, so maybe he's a little bit behind the curve, but you know, I just hope that he's got a bench.
The only reason I brought it up is that as a 92-year-old, while he was running for office, he used social media really well.
He did.
He did a great job of building an image of a very young man going for runs, driving a car, etc.
Exactly.
So that technology is important.
Prime ministers in cars.
Kate, coming back to you, the topic here is future of venture capital, which I would say all of us would agree is not static. Things change. What do you think is the directional sort of growth or momentum of venture capital right now? And address different types of funds. We had this morning an element from the SoftBank Vision Fund, which I don't know how they call themselves venture capital, but just your thoughts on it.
Yeah, well, a couple things. When I've been doing this for over 20 years. Joe, also, you've been a tech investor for a long time, so you've seen this. I think the rate of change, I mean, we can come here every year and see new novel technology. We invest in change, disruption, sort of creative destruction. And I think, in my 20 years and having been a technologist before that, an operator, that's been relatively a constant, in that the good news is there's more and more to invest in. I think the other long-term trend that's interesting is the long tail. I sit on a large public company. It's an industrial technology company. They own Tektronix, Fluke, called Fortive. And watching venture and not hardware, which is what they're used to, big systems, seeing it get, Sesame Street having a venture fund, investing in ed tech, companies like Fortive doing investing in startups and thinking about next generation technology. It's now not just us selling to each other within Silicon Valley or and within technologists selling to each other. We're selling to everybody. That's why 93-year-olds can know a lot about technology. Those things, I think, are long-term trends. I think the third trend, 20 years ago when I got into the business, 90+% of the venture investing was invested in the United States. Smaller dollars, of course, but all of it almost was here. That's just over half now. It's a global business. Our startups come to us sometimes starting in other countries before they're launching in the United States. So I think those are long-term trends. I think you can't be in venture as an LP or a GP and not see it being incredibly cyclical. See SoftBank for details. Corporate venturing, you guys have been actual legitimate early stage investors as a large buyout firm because you have staffed for it over a long period of time. So I don't put you in this category. But the hedge funds and buyout firms that create late stage funds, who, by the way, give us awesome markups because they're not sure how to price it, and then later say, gosh, that was a great company, but I didn't buy it well. So I think we're in a cycle, and I think we have various notes to suggesting we're at a peak.
But what we haven't seen is the business of venture capital change. We invest in technologies, we invest in change agents, but the actual way our funds are structured, how we process things, or have you, Joe, maybe coming to you, what do you think has changed, and what do you think is going to change within the world we live in?
It's actually interesting. I actually think you did see some changes during the 2000s, the go-go days, where venture funds were getting larger. And they're getting larger at a rapid rate. And I think they learned some hard lessons. You saw some return of capital. You saw a number of firms actually pull back, decide to go back and raise smaller funds because the actual science of venture investing, that has not changed. One actually has to find management teams, find interesting business plans. You need to stage capital, not just throw capital at investments. One of the hard lessons, we've learned every lesson the hard way at Warburg throughout our 50 some odd years in business. You just can't throw capital at entrepreneurs. They spend it. And one needs to stage it, one needs to milestone it. So you saw that retrenchment, you saw that pullback, then you had the financial crisis, and coming out of the financial crisis, I actually think things got a lot better, but now you're starting to see a number of funds actually raising a lot larger funds, and it'll be interesting to see, to me, where all that goes.
Sign of the market, top of the market again.
Sequoia's new fund is how big? 8 billion, 12 billion?
8.
Any large funds.
So as an LP, when you look at all these funds, and I'm sure you guys have a wide variety of funds, what does that mean to you, and how do you think of size and specialization, or what's the dialogue internally about this?
Right. So the dialogue internally in terms of when we look at and assess or go through our fund selection criteria, being a sovereign fund, there's definitely a sort of like more skewness towards risk aversion. So we tend to try and favor the bigger funds. But in the space of VC, you brought up Sequoia, for example. Being someone who is fairly new into investing into, let's say, VC funds, even for someone like Khazanah, it's quite difficult for us to get a seat at the table.
Yeah.
So the strategy that we have is like we would prefer to work with these smaller funds, where you can build personal relationships, you know, because for us it's like it's a journey for us. It's a learning process. Plus our allocation to VC will not be as big as what we allocate to, let's say, growth and buyouts. But we still feel that it's important to have our foot into the VC space. And the way we think about it is we want to see top-performing, top quartile type of managers who are a bit smaller, can have that personal relationship, but then have that open dialogue instead of
I'll
just...
ask you a loaded question. Has it worked?
It has, actually,
Thank you.
It has so far, but obviously, we will look to be doing more, over time,
So, Kate, another way of looking at what's changing in venture capital, women VCs or female...
Are there any other in the room? Nice. Okay, awesome. Becky, awesome. Okay, good.
So what's the dynamic around that from your point of view? You've been chair of the NVCA. You've seen some, I would say, concentrated efforts in the last few years, at least conversation, if not efforts. Has that changed? Is it changing? What do you see happening there?
Well, actually, one of the VCs I got to know early on in the business was one of Joe's partners early on, Beth. Well, it certainly has changed. I joke in 20 years on obviously many private boards. I've been on one other board with one other woman. So I chose a career where I didn't have to stand in line for the bathroom. It's all fine. And and nobody else was watching me when all the guys were still having a conversation on their side, and I'd have to lean over to keep on tabs with how that conversation was going. But I do think it's changing, and I think limited partners, I think, firms like Warburg and others starting to realize it's a missed opportunity in terms of great VCs, great entrepreneurs to back. LPs are asking the question. We've been very involved with ILPA, the Institutional Limited Partner Association, who's now 80% of the LPs said this year they will be asking, and it's now part of their due diligence questionnaires. And again, it's different. I think some of it did get, I think we started working on this 5 or 6 years ago actively at the NVCA level. And we're about to launch the new numbers, so I haven't seen the final numbers, but I did ask the Deloitte folks, give me a sense of where those numbers are. It actually is up, which is great. You see similar statistics very strongly in the female founder. We're going to do that this afternoon in another half hour. The number of female founders has gone up significantly. And again, it's an opportunity arbitrage, and same thing for investors and entrepreneurs of color, both of whom are obviously incredibly underrepresented. But I think we're seeing it change, and it's being led not just by women and minorities, because that would be a very small team of people who care about it. There are a huge number of male allies. So I think it's starting to make a difference. It's starting to change. I think it's a long way to go. But I think the fact that we can have this conversation openly and these guys both are nodding their heads and that you even asked the question on a stage like this says we're in a very different place than we were when I joined the industry, for sure. When I'd want to be dressed like they were, honestly. I would have. I would have tried to fit in.
Why not? Joe, geographically, let's say if you think about how you have an international organization, venture capital by the very nature of the kinds of stuff, at least we do, has to be in some shape or form local, because it is a lot of hard personal time work. You've got to spend time on your companies. I'm sure you do too, but you have a team all over the world. Where do you see opportunity right now? Do you see certain areas shining? What do you think of China versus India? We had this conversation at lunch, and John Chambers obviously is a very strong, he told me this morning he has to teach me how to sell better. So I said, sure. What do you think?
Well, first of all, your comment about being local. We have 10 offices around the world, and we're local in all those offices.
Right.
And that has to do with the networks you create, the management teams you find, the business plans you're backing, the localization and cultural issues that one contends with when you invest on a global basis. So those are all very, very real issues that a firm needs to contend with when creating value. In terms of China versus India versus Europe, look, our job's to find needles in the haystack. You try to invest behind waves. So when Carmine and John were talking about $1 in China versus $1 in India, my first question, I leaned over and said to Godfrey Sullivan, who's next to me, I said, well, what's the time frame? Because those could be very different answers depending on that.
Yeah.
So I think the issues are significant. I think we could probably do a whole conference in talking about all of those issues that you contend with going geography to geography. But we have all these issues. I mean, we have the issues with our employees, our professionals, making sure that we're recruiting and retaining the right people. So we have those issues to contend with. And then there's the whole sort of, how do you sort of make an investment? Does it have to be a control investment? What are the regulatory issues? It actually is a multivariable, multi-level issue that, to skirt the wave tops really wouldn't do it justice.
But for your team, is it driven top-down? Is it strategically you come up with a sort of allocation of globally based on what you're seeing, what you know, or is it driven deal by deal and opportunity by opportunity?
We got a big matrix. It's probably represents virtually everyone out there, who's practicing in a certain industry. We've got a matrix for you. And each of our teams, each of the leaders in our team is thesis-driven. So they've developed a real-time thesis that's very dynamic, that changes all the time as to where they think the best value is. Is it earlier stage? Maybe it's the public markets, and doing a public to private in some way, shape, or form, if that's the best risk-reward at that given point in time. But I'm often asked the question, well, Joe, you've been running Warburg for 20 years. You've seen a lot in this industry. What's changed? And I said, well, at Warburg, really nothing about our model has changed in that time frame, but all those theses in which we invest have changed. I'll give you one quick example. When I grew up in the firm, we did TMT investing. We have a TMT group now. TMT, when I grew up, it actually meant real technology businesses, real telecom businesses, fiber in the ground, real media businesses, newspapers we owned. We don't do any of that in the U.S. anymore. None. We've done some of it in China. We've taken some of those expertise to India. But now the definition of what we're doing in TMT in the U.S. is very different. I talked about cybersecurity. I talked about SaaS-based business models, and there's logistics businesses, a lot of software-based businesses. So those have migrated and changed through the years to wherever our team on the ground, who's spending all day energizing their network, building their team, trying to generate returns, what they think the best places to be spending the marginal dollar would be.
So, and your side, given that you have a global mandate as well, and you have all sorts of different strategies, is it is the next 10 years sort of strategically decided and then assets allocated based on that, or is it based on, hey, we have these things we're seeing all the time and we have to respond to them? How does that balance work for you? You have a very large team as well.
Yeah, so in Khazanah, we've recently had a relook at our portfolio again. It was basically from last year, where the change in government for the first time in 61 years essentially drove changes at the top management and even at the board of Khazanah. So I think we took the opportunity to, and we got a new MD who's come in, and he used to be the MD of the Malaysian Pension Fund, which is one of the biggest pension funds in the world. So he has come in with an asset allocation type of strategy. But probably one of the biggest differences is that we will never do something like fixed income. So that one we leave to the pension guys. But in re-looking at our portfolio, what we realize is, looking at it from a bottoms-up perspective, there are areas where we are probably a little bit more too overweight at the moment. For example, under my area of responsibility, what we found is over the years, we probably have done a little bit too much in, let's say, the Middle East. And seeing how volatile the particular region is, and it has been quite a challenging sort of like journey for us to try and monetize, for example, some of our investments in Middle East. The conscious decision that we've made is actually to not do any sort of like new investments, at least for the next few years, but then increase our exposure to developed markets where we are severely underweight.
Balancing your portfolio.
So we're balancing our portfolio. Again, somewhere like China and India is probably somewhere that we have a little bit more experience because we've been there for about 10, 11 years, where we actually have an office on the ground. And seeing Malaysia, where it is located in Southeast Asia, China and India are our biggest trading partners. So there's no way that we will sort of like reallocate away from those two particular countries. But going forward, there's definitely a move towards more developed markets, and in particular North America.
So we have very little time. I'm going to ask Kate one last question. 10 years from now, if you were looking back at our business, which is venture capital, do you think it looks the same?
Well, we'll be investing in very different things because we're investing in
course.
change.
Yeah.
So that is a given. I think the basic tools will be the same. I'm with Joe. I mean, I think the basic tools will be the same. I think the question is, so many folks want to get in it. Will again, the cycle of everybody investing stay the same? I'd say if I was going to give advice to entrepreneurs in the audience, and Joe, chime in if you feel any differently, particularly on the venture side, we are in such a high-risk part of, Nick's portfolio. We have to provide outsized returns, which is why some of the bigger funds become more of an index. If they're focusing on venture than actual high returns, we've decided to stay small. And by the way, it's a barbell right now. Lots of small funds and a handful of big ones. I think there's a lot of return potential, which a lot of folks agree in the small ones, that then hand things on to folks like Warburg over time. But I would say for you as entrepreneurs, go for the big markets, go for the big vision. One of the things I was involved in, helped write Section 100 of the Jobs Act. I think when you think about exits, whether you're selling to a large strategic or you're going public, the markets are big. There's a lot of liquidity out there overall looking for return. But to clear the market and to get the kind of multiples ultimately that you get, you're the ones earning it as entrepreneurs. Keep asking yourself if your vision for your company is big enough. I think there'll be we can't invest in lots of big products or features. We have to invest in big companies. There are so many big companies out there yet to be born, so aim high. And I think that will still be what the best will be doing 10 years from now.
So I can keep going on this. I know I have a lot of
It's our
questions,
favorite
but
topic.
we are a little bit over time already. I really appreciate your time and taking, and doing this. I hope it was interesting for you. It was for me.
Yeah.
Thank you so much, and we'll see you around.
Thank you.